The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Let's check out where the markets are at right here. I'm your host, Darrell Martin on TFNN. And we got the S&P's up 9 points. The Nasdaq's up 36.5. So pushing that solid one deviation level, going a little bit beyond it right now. We got the Russell up 8 points. The Dow is up 27. Gold's currently down 10 points. Just had another volume spike on it. So we'll see if we get a little bit of a bounce off of that. We got silver right now is down about 0.25%. We got copper is pretty much flat on the day. Oil is up 47 cents. Natural gas, up about 0.25% right now. We also have corn is flat on the day with soybeans down 4 points. Euro dollar is up 12 pips. Pound dollar up 5. Aussie dollar up 31. Euro yen up 4. Dollar yen flat. Pound yen up 8. Dollar CAD is down 7 with dollar franc down 6. So pretty light there on the FX markets. And it's not a massive move right there so far. So let's go ahead and we'll look at some of these deviation levels. We'll see sort of, how has the market been moving overall on these. So right now, let me go ahead and pull that chart up, and let's scroll through. Let's look at these FX pairs that right now are pretty flat on the day, but we'll go through and look at all of them and see where they're moving. So we got the Aussie dollar, one of the bigger movers of the day right now, sitting up right at the 0.7 deviation level. And we'll see if it is able to break through or if it's going to hold strong there. So, like I said, we got a lot of different pairs, and it's not a massive move at the moment. But right now, they're hanging out at that level. Let's go ahead and move on down. Let's check out the euro dollar. And on the euro dollar, moved on up. Dollar showing a little bit of strength, pulling back at the moment. But really just not a lot of movement. Very flat day after yesterday's massive 2 deviation level move over on the euro dollar, and as I said yesterday, it was pretty much done after that point. You can see it just hovered right around that area. We'll go ahead and check out the pound dollar as well, see if we're seeing consistency there, and we do see some consistency. Moved on up to 0.7, but came on back down and just hanging out at settlement. So again, just hanging out at settlement right there, and nothing going on. So really quiet in the FX markets. Not too surprising. On a Friday, that's more what we expect. We get the same thing happening in dollar CAD. Reason being, of course, is Asia's done. They're into their weekend. They're asleep. Europe's gone home. It's Friday, Friday night, and they're just looking to have a good time, and they're not sitting in front of the charts right now. We got a dollar yen. It moved up, moved down about a half deviation, pulled on back up, showed a little strength, hit the settlement line. You could say filled the gap if you wanted to, and sitting right now, like I said, just a few ticks off of the settlement price of yesterday on the dollar yen. On euro yen, we're seeing pretty much the same thing, very flat markets. So flat markets in the FX right now, but we have had some decent moves over in the indices. So we'll start off with the S&P. We got the S&P E-minis right there moved on up to 0.7 deviations, and you can see that move right there, and may push higher. So we're seeing NASDAQ pushing on higher, and we might see the indices, the other indices, go ahead with it. And let's check out the NASDAQ and also do a little recap on yesterday's trade. So right there, like I said, NASDAQ right now pushing above 1 deviation and did a little pullback, but decided to bounce right off that 0.7 level. And you can see that right there to the tick, and then just came right back up onto 1 deviation, pushing above it. If it does decide to keep going into the end of the weekend here, it'd get 33.51. So that'd be a pretty massive move. But Google had some stellar earnings. And as those came out, of course, that drove, the NASDAQ. And this trade I talked about yesterday, it worked out literally perfectly. So just a very good play. Take profit levels, everything. And you got Google continuing to move up. Let's see here. I'll show you a Google chart right here. You see this? So it's continuing to rise up. Not only did it run up, but it kept going. And you had a lot of profit taking happening right here. This big, bar. We can even bring that down a little bit lower. But right there, you had a bunch of profit taking, some weird erroneous quotes as well. But starting to, maybe potentially edge down. We'll see. But at the moment, it's looking up for Google. So Google passing the $1,000 mark. And we can back out. We can check out its history and to see. I mean, this is an insane large move. And go out even further. And obviously breaking highs there, but just a stellar move, and still has time left to go in the month. We'll see if it keeps that big move. It's had some down moves of similar size. So back here in 2008, back in January there, but really usually doesn't have that big of a move. So it was pretty sweet. We went in, and what we did yesterday was I walked through it. So make sure you check out the archive of that show if you haven't checked it out. But I went in and I talked about how to straddle the NASDAQ on the Google earnings release, actually to strangle on the NASDAQ earnings release using Nadex. And I want to walk you through that and how that works. And just a reminder, if you don't have a Nadex account, hop on over to TFNN, click on Nadex, and then click on Trading, Demo Trading Account. Fill in your username, first name, last name, phone number, email address, click Apply for Demo, and that will get your account going. They'll email you, and you'll be able to log in right away, okay? So the next thing, to get a live account, just click on Create Account. It's only $100 to fund a live account. You obviously can put in more, most people do, but that is the minimum funding requirement. It's not like a massive, $5,000, $10,000, $25,000 funding requirement. There's no day trading restrictions like there are in stocks, so you don't have to worry about getting assigned a stock, stock called away from you or put to you. You don't have to worry about having to make or take delivery. You don't have to worry about last trade dates, and you don't have to worry about margin calls because every trade has capped risk. Well, on this trade, what I did, and we'll see if we can walk through some of the steps, but I was looking at it yesterday, and we were looking at the deviation levels. So I have to move this up here. But right there, this is, the time of the show yesterday, right here around, 1:30 or so. We're going in, and I noticed we're right at half a deviation. And I was a little concerned because I'm like, hey, if the market keeps going up, there may not be, any strikes, because the highest strike available was 33.04. I'm like, if it keeps going up, we're not going to be able to get a good risk reward on this trade. And I expect at least a half deviation move to happen whenever the Google earnings announcement comes out. And so we went in, and I'll pull up the exact strikes I got so we can I literally walk through each piece of it step by step. But let's see here. Give me a second. We'll go through them. All right. So went in, and on the NASDAQ, we were looking at buying and selling several strikes. So I went in and I bought the 3,300 strike. Okay. I also bought the 3,304 as a tiered strike. But just to go over the basic strangle and then talk about how I maximize the profit on the trade as well, I bought the 3,300. So if we log that, what you'll see right here, so we went in here, we bought the 3304, so we're saying it's going to be greater than 3304 at 415, and depending upon when you got in, 3300. Do that one first. So we'll do the first one. This was the conservative one. So 3,300. And, doing that trade right there, it's like, okay, so how are we going to set this up? And, what are we going to do on the play? We need to make sure your risk, you're looking for, somewhere close to a 1-to-1 on the trade. And so to do that, I went in and I bought the 3,300s for $12.50. Okay? So $12.50 was the amount of risk on the long side of the trade. So I got that one. Okay? And then I went in, and instead of typing all that, just copy and paste it. I sold the 1324, or not 13, looking at the wrong contract there. So the 32 was like 68. So 32.68. And I sold that one for the exact price of, let's see here, what do we get on 32.68? Went in and bought those, sold those. There's so many contracts in here because I did a lot of trades yesterday. I'm trying to walk through each step. I want to make sure you are able to follow along. But we got them in pretty cheap. Looks like around 32.60. So we got 32.76. 76. Okay, there we go. So 32.76. Let me get the right ones. 32.76. And I was able to get a feel for a really low risk on that one. Looks like at some of those contracts, because I added in more contracts, 93.50 at one point. I was able to get in on those. That was a little bit later. And then during the show, if I can find those, then I'll let you know what I got filled on during the show so we can use that price as well. But I'm just looking. I'm not even seeing. Okay, we did the 32.68 on the show. I was able to do some higher ones at a lower price later. And on those, I did them at 88.50. Okay, so just so you understand that the risk is going to be the maximum value of the binary, okay, when you're selling, okay, minus the price you pay. Because when you're selling, the price you pay is the maximum profit potential, okay? Therefore, my risk is, what, $11.50 on this side of the trade. Okay, so when I'm selling, my price is the maximum profit potential. My risk is $100 minus that. So at $11.50 risk on that. Up here, when I buy, it's really simple because my risk is the price, $12.50. My profit potential is $100 minus that. So I can make, up to, what would that be, $87.50. Okay? Now, on this, I'm using a conservative play. I'm trying to get them in as close as possible. I want to go, hey, I want this first one definitely to be profitable. The ones after that are the ones where I look at, really making some decent cash. But on this one, I want it to definitely be profitable. So I go in, and I go, okay, well, first thing here, I have a risk of $12.50 plus $11.50. So I have a risk of $24. And then what I want to do to be conservative is I go, you know what, this is right before a half deviation line, 3,300 with a deviation at 33.01. And this one right here is right above the deviation, 33.68, with a deviation at 268. There we go. 32.68, with a deviation at 32.64. So I'm getting, basically what I'm going to do is I'm going to get out right before it hits the deviation level, which is often where it will hesitate, pause, fall, whatever, reverse course. So that's why that's my conservative play. It's inside the deviations. So if I go in there, and again, I have a risk of $12.50 plus $11.50, and then I go, okay, well, how am I going to get out? Well, I'm going to set an advanced take profit order. So as soon as I'm filled on the buy side, I'm going to set a take profit to get out at 43. And on the sell side, I'm going to set a take profit to buy back to get out at 57. The reason I do this is that when it hits your strike, like when it hits 3,300 or when it hits 32.68, that I know that it will definitely go in and it'll be worth $50. So that's the actual price of the binary if it's right at 32.68. Now, that's the value, but you have bid-ask spread, okay? So that's going to put you more like at a 47 by 53. And what if it just gets within, what if it goes to 32.99 and not 3,300, So I give myself a little bit of wiggle room, and that's where I came up with the 43.57 rule. So we'll look at how that one played out, and then we'll also talk about how I maximize profit with another tier on top of that. Stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And so we're talking about is like going in and buying the binaries and selling the binaries and putting them together. And so, we do basically, we pull up the US Tech 100, you're going to find the right strikes. Use the scanner, it'll make it a lot easier, okay? So, I got a silver position on right there. That one looks like it's going to expire in the money. But anyways, back on to the NASDAQ right here. So we go in, we bought it for $12.50. The market ran up. It obviously hit $43, okay? Because remember, it's worth $50 if it hits $3,300. So on that strike right there, very profitable on that one. Went in and what do we make? So let's put together the math. Okay, so you really want to understand how these pieces work. And if you understand this, then you can take it to the next level and start, maybe doing some layering of some strangles with it. So we went in and we bought it for $12.50. So we'll do $43 is what we sold it for minus $12.50. We made $30.50. And then take off the short side, it lost. So we take off the $11.50. We netted a $19 profit on the trade. Okay, so that was our profit. Not a bad profit on the trade. Worked out well. But that's not the total picture. That's not where I want to stop. Okay, this is my conservative trade. This is the reason I do this. It's because what I really want to do is I really want to make a massively profitable trade. Okay, and this one is just to sort of get me going and cover the risk on sort of I guess you could say a low risk, lower probability trade, but at a time when I expect there to be massive volatility. So I put this trade on. That's my conservative trade. And the next step is I have to go, okay, now how can I use some of that profit in order to potentially go in and make a lot more money? And so I went in and I actually got some higher strikes and some lower strikes at a very cheap price. So I was able to go in on here, and this one was actually a little bit higher, which worked out well. But I was able to get the 3276 contracts, and I was able to sell those for $93.50. Okay, so at a very low risk on these, and making my risk like $6.50. So I added these on, and basically what I was doing is I was like, hey, I expect to make about $20 or so. So I'm going to use some of that profit to pay for these. So if they expire, if it expires in between, like I hit this profit, but I don't hit the other one, then you know what? No big deal. I'm still up a little bit. It really didn't cost me anything on the trade. So obviously one of them does have to profit, but if that works. Now the next one I did, and this is the one that really paid off. I went and did the 3304, and on that one I paid $5. Okay, so give me a $5 risk. And I was able to go in and I did a couple things on this. One is I did take partial profit on some of my position. So I went in at $5, like I said, bought those for $5. And then, as it got a little closer to expiration, they were profitable. I went in and I took off some of that profit at $21.50 on, say 10 contracts. All right. So if I go in, do the math on that. So I got $21.50. Minus 5, and then of course I lost, or not minus 5, $21.50, yeah, so minus $5, that's my profit, and then I lost 6.5 on the other one. So I made $10 on about an $11 risk. That wasn't the big trade. I was getting really nervous because it got really close and it was just hanging out right at 3304. And so I was like, well, I might as well at least cover my risk and make a little bit on this no matter what. So I closed out half of it, but then the other half I left on all the way till expiration, okay? And so when I left that on, they expired at $100. And what that means, if I bought it at 5, it expired at 95, then I had obviously a very, very nice payout on that trade. Let me see here. I'll show you so you can see the tickets, how it looks whenever they expire out. There it is. And right here, max in on this so you can see a little better. So it expired right above 3304. So 3304.30. So I got a $1,000 payout. So I got my $50 of risk back plus $1,000. So on those, then you only go, okay, well, I went in and I bought it, or it expired at 100. Okay, minus 5. So I made 95 plus. Remember, I had 650 on the other side. So minus 6.5. So I made $88.50. You go in, you did 10 contracts. That's $885. Okay, on a risk of, so $885 on a risk of 16.5. So not too bad. Let's see, do that backwards. About a 536% return on the trade. And again, those are I didn't just do those. I did the first one to pay for it. So I had my risk management check. That way, my lower probability ones that had a high payout were covered, even if it didn't go that far. All right, stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, here we go. So just checking everything out right here and looking at this and trying to put all the pieces together for you. I hope you're picking it up. But if you can go in and you can tier these, like what I'm talking about right now, where you go in and you have like your conservative trade that gives you the extra, I guess you could say, cash needed for the trade, then you'd be able to go in and do a very low-risk, high-profit trade over here on NASDAQ. And again, this is not just a random strangle. It's very precise. We're doing it based on what we expect to happen in the market and how we expect that to play out. So what I'd like to do is just show you, sort of how do I set up the scanner for these? What am I looking at? And hopefully you'll start to put those pieces together as we walk through it. But it takes a little bit of practice, but you can definitely get it on there. Like I said, you can practice it in demo at absolutely no risk to your account there. And so if I put it right on over here and go to the binary scanner and then go in and choose whatever market I want. So let's say I go in and I choose, in this case I choose the U.S. Tech. And if you don't know what you do, just reset the filters if nothing's showing up. That's the first thing. If you ever don't see anything, reset your filters. So we got U.S. Tech, and then go and choose, say, like 5 to 30. Because on these, I'm looking for a really low risk. You may even use lower on this. You might even look for like 2 or 3, but probably about $5 risk on the trade. And then you scroll down, and then you find any contracts that would apply in that risk range. And so it helps you easily find a strangle. Now, I normally don't strangle news trades. This is an exception because, one, I'm doing on the U.S. Tech, and I don't usually do straddles on the U.S. Tech 100 simply because the way that it's set up, the way that it works, the point value is so low that you don't make near as much. So on this one, I can use a lot less risk, and I can make a lot more profit on even a small move. On this one, it had to move about half a deviation, so we needed a solid half deviation move. But anyway, so on the Google Trade, I'll use that. And of course, there's a lot of different ways to trade on Nadex. This is just one of them. I've even had one time where I did a range-bound trade on it, and it worked out really well. It expired. I did a range-bound trade right into, because a lot of times it'll get flat going into the announcement. Today, it definitely did, or yesterday, it definitely did not get flat going into the announcement. And if I pull that up for you, let me see here. Right here. Okay. So if we go in and we pull up going into the announcement, we back this thing out. And it was, I guess you could say it was a little bit flat, depending on what time you got in. But we got in earlier, it ran on up. But right in here, what I have done, and I've done it successfully, it's been pretty cool. It was very close. It was in like 2 ticks. But I went in and I've also done the opposite. So I expect the NASDAQ to sort of stay within a range, like right before expiration. And so I have actually went in and bought the lower one and sold the upper one, saying it'll be range bound right into the 4 o'clock announcement. See how it's bouncing right there? So I do that, and then that way I'm profitable. It stays in that range, and then when it explodes afterwards, I have the strangle on. So that's another thing you can do on this trade is you can add in a, what I call a, when you do this, it's a butterfly, or an iron butterfly. So I'll call it a strangled butterfly. And it's because I'm doing a strangle with the higher and lower strikes, where I'm buying the higher and selling the lower. And then I'll do a butterfly to also pay for it. And the cool thing about the butterfly is, like, it could literally bring in enough income that even if the market didn't break out, you could be profitable on the trade. And butterflies usually have a pretty low risk, as long as you'll exit if it hits the strike. So, anyways, that's a one additional lesson that you can sort of put that one as a thought on future news trades, is doing binary butterflies into them like before the news, when the news happens like right after the announcement. So like it happens at 4 o'clock. Well then, hey, if I can get when it expires at 4 o'clock, then that could work out really well. Let's go ahead and check out any news we do have coming up. So we have some things this week. And yesterday, by the way, we didn't get to go into all this one, but let me list it on here. We had the pound dollar trade. We did go into that one. So we went on that one. We had the pound dollar trade. And then tomorrow, let's see, I think we have the dollar CAD. Not necessarily a major news trade, but I'll go over it with you just so you're aware of how it works. Okay? And back this thing out. And then I'll pull up the details on it for you. All right. So on this, got a news strangle. Yeah, there we go. So tomorrow morning at 8:30, we're going to have the CAD Core CPI. Now, the average move is 60 pips, but this can be really deceiving because what really happens is you have moves that are like 100 pips, 150 pips, and usually that's when like there's 4 or 5 CAD announcements coming out at one time. But only 25% of the time does it actually move more than 50 pips. So what that tells you is it usually is very range bound. 3 out of 4 times it's staying within 50 pips. But when it does break out, it breaks out massive. And again, that will happen often whenever the announcement comes out, along with a lot of other like USD and CAD announcements happening at once. So today, looking at this and how this worked out 8:30 Friday this morning, let's look at it and see what did it do. Right here at 8:30, we got the report. And so now let's measure the high. Okay, and so the measurements I gave her from 8 to 10. So to 10 o'clock, there's the low. We got 16 pips on the trade. So the market only moves 16 pips. So like I said, only 25% of the time does it break out. So if you would have went in and you would have done a binary strangle where you went in and you bought one below for 10 o'clock, say like at 1.0280 right down here, and you would have went in and sold one higher like at 30.10. Okay? It's right up here. If you would have done a strangle in that range, and it looks like it's a big range, but really if we back out, I mean, it's a very small move. So if you would have went in and done that strangle in that range about 30 pips wide, then you could have inverted strangle, a binary butterfly, then you would have been able to be profitable in that trade because it stayed inside the range through the news announcement. So that's what when I say butterfly into the news, what I mean is you get in like at 8 o'clock, you buy a lower one, you sell a higher one, higher than the market, and you bring in a premium on both sides. And your risk management plan is that you actually are going to let the news come out because it may spike and come right back up. Okay, so we're not getting out right when it hits the strike. Now, after it spikes and comes back and it starts moving, then you could look at exiting at that point. But there's a lot of these trades that do come up. They give you a lot of different opportunities, and you just have to be ready for them. So you got to know they're there, and I try to cover as many of them as I can for you on this show, so that way you can sort of have a news trade plan together. We are going to have U.S. existing home sales. That's going to be coming out on Monday. So, we can look at that, see if that's a potential setup for us as well. Looks like the last one came out on the 19th of September. And so if I go back and just look at my calendar here and look at my stats, I don't think we have just a massive move that we want to count on. Yeah, we got, let's see here, I'm trying to see. It looks like it's a pretty flat announcement overall. Existing home sales is more flat than not, so it's more of a butterfly style news trade. And so I'll go in before it, and to give you some of the stats on it, again, because that's going to come out Monday at 10. So since it comes out at 10, okay, then there are binaries that expire at 10. Usually, again, this is not a major market mover. So since these markets expire at 10, I could hop in like at 8:30, at 9, at 9:30, and I could do a variety of butterflies. So the markets that move the least are Aussie dollar and dollar yen. So the Aussie dollar has an average high to low after the announcement of 25 pips. So dollar yen has an average high to low of 30 pips. So if you can do one that is, as wide as that or wider, maybe even leg into it, and that's 90 minutes before it comes out. Those are the two best ones. All the other ones are like 40 pips or higher for a range afterwards. Or before it. So they move up and down. So when it's moving up and down, this is going in and going, okay, I think it's going to stay in this. And so before it, with the expiration at 10, that's the big thing is, this is not a binary butterfly into the news. This is a binary butterfly right before the news. Okay? So, going into it here, we'd also be looking at 60 minutes before. We got the Aussie dollar only has 20 pips. Dollar yen still at 25 pips. Okay? So, Aussie dollar really having a very low volatility on this announcement. And then 30 minutes before, Aussie dollar and dollar yen have 15 pips. The euro dollar, pound dollar, dollar CAD, dollar franc, they all have a 20 pip range. Pound dollar just a 25 pip range. So again, Aussie dollar 15 pip range, dollar yen 15 pip range. So if you can get 2 strikes wide, okay, that's 20 pips. If you can go and get that, then you actually are going to be able to potentially do a binary butterfly into the news. Now, I highly suggest binary butterflies are new to a lot of people, and so we're going to go in a binary butterfly. Sorry, not into the news, but a binary butterfly expiring before the news. This is a great opportunity to demo trade this. Hop in and try doing them before the news comes out at 90 minutes. Try maybe put on another one at 60 minutes before, another one at 30 minutes before, and just practice it. Okay? So I want to give you those stats one more time to help you out. Okay? So 90 minutes before, this is on Monday, 90 minutes before 10 a.m. So at 8:30 Eastern Time, you're looking at a 30 pip range high to low on dollar yen and a 25 pip range high to low on Aussie dollar. Okay, so you got 30 on dollar yen, 25 on Aussie dollar. 60 minutes before, you got 20 pips on Aussie dollar and 25 on dollar yen. And 30 minutes before, you got 15 pips on dollar yen and Aussie dollar. Now on euro dollar, dollar CAD, dollar franc, those are all 20 pips, 30 minutes before. And pound dollar is 25 pips, 30 minutes before. So anyways, hopefully you got some of those. You can go back. You'll have time, obviously, to watch the archive if you want to. But you can go in on them, and then what do? How do you take advantage of these? Well, if I go in, I would flip my risk up here. I'm going to do a binary butterfly, so I do like 65 to 90. And, maybe I'll choose both. That's one of the nice things about the scanners. You can look at multiple markets at one time. So I choose Aussie dollar, dollar yen. And then I'll be looking for ones that have a width. I want it to be wide enough to be able to do the trade. So if I wanted, something that was 30 pips wide, then I want 30 pips between the high and the low on, my binary butterfly. Like, 75 and 97, that's pretty close, but not quite 30 pips. But I want about 30 pips wide on it to be able to do it. And then I'll, buy one and I'll sell the other. So Pretty simple to do, but it does take some practice because you'll probably make some mistakes the first few rounds. And if you have any questions about that, feel free to call in, let me know. I'd be happy to walk through the trade with you step by step. Okay, well, that really wraps up the news for Monday. Not a whole lot happening Monday, but at least you do have a tradable event. And if we look a little bit further, we go on into the next week. I just want to see, because we're supposed to get some numbers out, and those numbers are now scheduled. Yesterday I mentioned that the Bureau of Labor Statistics said it would take 3 days. Okay, again, it would take 3 days to be able to get the numbers ready to release after the government was reopened, and putting the earliest time at Tuesday. And now that actually has been scheduled. So it's going to be very unique, okay? We're actually going to get a non-farm employment change, and unemployment rate is coming out Tuesday morning. Again, it's coming out Tuesday morning at 8:30, not our normal thing that we're planning on, okay? We usually don't have that. Usually it's on Friday. Should have happened Friday a couple weeks ago. So expect this. Put this on your calendar. It's not a usual one that you're ready for. But again, the non-farm employment change and the unemployment rate will be released Tuesday at 8:30. And with it being, held back, it could be even more explosive. It'll be really interesting to watch. So we'll talk about that game plan on Monday on how to get ready for that. I just want to remind you, I want you to make sure you remember just in case you missed the show or whatever. I want to make sure that you know, hey, Tuesday, ADP, not ADP, but the actual NFP and the unemployment rate are coming out. Then let's see, we'll have the CPI that night for the Aussie dollar. So that occasions a tradable event. I'll pull all the stats. We'll go into detail and walk through that one step by step for you to make sure that if there's a good opportunity there, we don't miss out on it. And let's see, on Wednesday, we're going to have the bank rate votes, the facility votes. Usually not the biggest mover, but that'll be Wednesday, 4:30 on the pound dollar. And I always go in and I re-pull the stats each time there. Then we'll have the CAD is going to have their interest rate and rate statement and press conference. All that's coming out on the USD CAD on Wednesday. So Wednesday will be a good dollar CAD movement day. A lot of volatility to be expected. Crude oil inventories are back. So we'll be getting crude oil inventories on Wednesday, this coming Wednesday again. And let's see here. That's really going to be the major announcements to be aware of for Wednesday of this coming week. Now, Thursday of this coming week, we got on the French flash, not really a big deal, French flash manufacturing PMI, but the German flash manufacturing PMI is definitely one to watch. Expect, solid 20 to 30 pip move on that one. Of course, we'll have unemployment claims. Then we're going to have new home sales. So getting those back on the roster. And at 12:45, Bank of England Governor Carney, he's going to do a little speech. So, of course, people will be looking for any interest rate clues or whatever is going to be going on there. And then on Friday, we're going to wrap up the week. We're going to have a preliminary GDP in the pound dollar. So it's definitely going to be a tradable event. So you usually get a lot of volatility. We'll also get a core durable good orders here in the U.S. at 8:30. And that really wraps up our news for, like I said, the entire next week. And then the franc, the euro, and the pound, they're going to have their daylight savings time shift actually kicks in. So they're going to be moving everything back by an hour. So that's important to be aware of just because that will move all the news announcements that come out of those countries. And, anyways, has a little impact on Forex, on times and schedules, and the way that currency markets move. All right, well, stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. At Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. So, anyways, but hopefully you got over the last couple of days, you really picked up how the binary strangles and binary, not so much the straddles, but the binary strangles work. And I hope you added in that ability to know how to layer in, but without adding risk that much. Basically, if you get that conservative trade that's profitable and using some of those expectations of profit to help you, have a very potentially very profitable trade. And then another way to help hedge off some of that risk by going in and adding in a very simple concept of possibly doing maybe a binary butterfly that expires right at the news. So again, Monday being a good time to practice that. So that way it could potentially be a trade that could really pay off for you at times when you expect the market to be flat, like right before a news release. Okay? So, just a few different pieces, different things that you can add into your trading arsenal, but as you add them in together, piece by piece, and a lot of times people come in and they'll go, well, which one should I do? And, get good at one is the first thing. And then the next thing is I go into is there's not a perfect strategy for every single minute of every day. So it depends on the situation. Like I usually do straddles on news, except for on NASDAQ because of the way the spreads tick. I'll also do, binary butterflies, iron butterflies going into the news when I expect the market to be flat. When I expect it to be volatile, I want to do a strangle or I want to do a straddle. For directional trading, a lot of times I'll use the spreads for just normal mirroring the market trading. So it really depends upon what you're trying to accomplish, what you're trying to do in order to be profitable in the market, and so there's not just one perfect strategy. And I think sometimes we so want that we can get caught up in, which one's the right one, and I think that can be the challenge sometimes, maybe with options in general. It doesn't matter whether it's Nadex or whether it's anything else. It doesn't really matter what it is. It can be sort of challenging to decide, what do I do? When should I do it? Which one should I spend all my time on? And again, the biggest thing I can tell you is definitely to go in and just get really good at one strategy and add in to that strategy. And then what happens is all the different strategies for you actually become you can say basically a play in your playbook. Okay? So as you get better and better at trading it, then you can go in and do more trades. Like one of the trades that actually just popped off the screen there, but I was looking at potential Russell trade. You're going to do these premium collection trades. They're great if you don't have a lot of time on your schedule and you're trying to figure out what to do and how to trade. There also, you can do the reverse of that, because the expiration premium collection trades may not match your personality at all. You may be like, there's no way I'm going to do that. Okay, so if that's you, then you can do the trend trading. You go in, instead of like going in and selling this thing for $15, which means you can only make 15, and you have quite a bit of risk in doing that. You could go in and you could go, I think maybe it's going to go up. It's going to buy, so you could do a buy. Obviously you need to have some things lining up on your charts to go with that, but that's just one of many examples. As you can go in here and you may do premium collection, you may do expiration trend collection, and that's a very low risk, very close binary, like ticks away, but it's a trade that you can do where there's not a lot of movement required for you to be profitable. You can go in and you can do straddles on news, you can do directional on news, you can go and you can hedge. So maybe you're a futures trader. This is one of my favorite strategies. At heart, I'm a futures trader, and you go in and you could buy the S&P and sell 5 spreads. And so that's a great strategy to use, especially if you're a futures trader, because it'll basically think of it as options for day traders, for futures day traders, for forex day traders. And you go in and just let's see if we can find a good example. A lot of these markets have moved a lot, but we'll cover that next week. We'll go maybe dive in a little deeper into the ultimate hedge strategy. All right, well, I hope you'll have a great weekend, and I will see you next week right here on the Diagnostic Trading Hour.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.